Good morning, traders. It's Monday, April 15th. Taking a look at the charts. Equities having a bit of a bounce today. We're seeing the NASDAQ up 0.8%, SP 500 up 0.75%, the Dow's up about 0.8%, and the Russell up about 0.4%. So overall, if we take a look at the daily chart, you can see it's a fairly controlled pullback so far in the SP 500. If we take a look, this is a nice kind of controlled pullback. We are down to that 50-day moving average, which can act as a critical support level. And we also, if we take a look at our shorter term charts, we had a huge level over anything over 7 or 8 on our panic indicator when it closes, not just an intraday high, but closes above 7 or 8, typically can become a standout a standout low on the chart, meaning a month from now, we'd look back and be like, oh, wow, look at that. Pullback, huge panic, everybody bailed out, and then the markets rallied. So hopefully that is the case. Now, too much panic will change the trend. As we've talked about, we do have not only our short-term price action is now under the 20-day moving average, which we can also see on the daily chart. We're below this pink line, which is the 20-day. Our short-term momentum went from green to orange, which is neutral, and on the futures chart has broken down to red, telling us, hey, momentum-wise, it's actually in a downtrend. Now, momentum, we're not trading momentum, so we're not out of the markets just yet. In fact, the SP 500, like the SPY ETF, isn't quite red just yet. Usually futures actually leads a little bit for the ETF. And so we'll see if this market gets some traction and starts to rally. There is potential here that depending on how everything moves today, we might have a sell signal in SSO to get out, or the markets are going to recover, hold its ground, and hopefully keep on going up into May, which would be ideal. But we'll take it, again, one bar at a time. There's no point in panicking or worrying about getting stopped out. It's just part of the game, and we rinse, we reload, and wait for a new setup. So let's take a look where money is also flowing today. So into stocks, into bonds. We're seeing a little bit of a bounce into bonds, but overall, bonds are out of favor. Again, flagging down. Interest rates not really going anywhere. Everybody was expecting the Fed to start cutting. They all piled into bonds to front run it. When you try to outsmart the market, you usually end up getting caught on the wrong side because you're trying to pick a bottom or a top, and that's what's happening here. You can see quite a bit of selling panic volume on the bond charts. People are starting to really get shaken out, realizing it's falling. If we take a look over at the dollar and precious metals, we've got the dollar continuing to muscle its way higher. We have been seeing the dollar and gold rally together. That can happen. It's not that out of the norm. Typically, if the stock market's going to fall and go into some pretty big panic, we see the dollar do very well. And also, we're in this late stage of a stock market top, which I believe, and that is when gold can do well also. So both of them do well in this phase. It sounds counter to each other, but it's just the environment we're in, and you have to realize that nothing is fixed in the market. What worked before or what people expect isn't always how it's going to move. You have to really just manage those positions and follow trends. Sometimes we'll see things move together that typically are always inverse to each other. If we take a look over at gold, gold is slightly down, had a huge blow-off move up to 24.50 pretty much. A session ago. Now it's pulling back. You can see huge selling stepped in. It squeezed up and then sold down. We'll see how this plays out. This is obviously a little bit of a topping wick, telling us that, hey, it ran up, sellers came in, crushed it, meaning we could see it pull back and take a pause. And this is exactly what we've been talking about. We did our Fibonacci extension. Our target came right up into this level. If we go from the low to the high, down to this low, pull this down. It came up to this 100% measured move, and now we're expecting some type of pause or pullback, just like over here. This is what we want. We want a pause or pullback, and then it can take a run up to that next target, which will be 2650, 26 to 2700, somewhere in that range. So nothing out of the norm there, although people for some reason are panicking that gold is topping, but really it is just hit its level, and it had a euphoric kind of move. Everybody piled in, chased it in, the last people, I think, and then sellers stepped in and unloaded, and now it needs a break. Silver had the same. Everything kind of had that big flush higher, kind of squeezed up, squeezed the shorts out, sucked in a lot of people who are super sensitive and not in yet. And then, of course, it's pulled back a bit. If we look at gold miners have had a nice pop, but definitely a reversal type of bar. Look at the volume here. So definitely telling me that it looks like a little bit of wind has come out of the sails here, and now we're going to see a bit of a pause. And again, it's the same type of thing. We got the low, we got the, depending where we go here, we got the high and the low. It came up and hit that 100% measured move, and then you get the volatility, and now a pause or pullback in miners, just like here. And now it's time for another one. So let's take a look over at crude real quick. Down a little bit this morning. Overall, it is stair-stepping its way up, a series of bull flags. Typically, that's just a typical price action in an uptrend. Still looks really bullish. If we look at the energy stocks, XLE, they've been acting as a leading indicator. Now, we did have, obviously, it was a big distribution day on Friday, that last session. Everything pretty much got hit pretty hard. And this is what I talked about months ago when the stock market started to break to new all-time highs. If we just go to the SP 500, we'll go to the weekly chart. And this is kind of what I was talking about, that when the stock market breaks to new highs, it's going to create a feeding frenzy of all the shorts who are betting on falling prices to get out. It's going to create a very strong move, and then people are going to chase it and get in because they're missing out. And then we got to start watching for some of these distribution days where literally massive volume hits the market and everything gets sold. It's big institutions, big hedge funds, savvy money managers who know what's going on, unloading, lightening up their portfolios across the board, saying we got to start to lock in gains, reduce our exposure. The music's about to stop. A lot of them have the same mentality and expectations that I have. And so Friday was one of those days. Everything got hit with big volume. And so that's just somebody's trimming their portfolio, doing what we do. We scale out, we manage our positions. And eventually, as we get more and more of these, more funds start to catch on and start to get nervous. And eventually they all start doing it. And that creates the bear market. And they take forever to unload their portfolios, months and months. And it, of course, leads to a major stage 4 decline. Other than that, let's take a look over the hot list. About half the list is in a short-term downtrend. About almost half of them is in a longer-term downtrend. Most of them are in a risk-off phase. So there's not a lot of action going on. Again, if we take a look at the different indexes, the SP 500, as we looked at here on the daily chart, if we take a look here, it's a nice controlled pullback to the 50-day. But if we look at the NASDAQ, for example, actually the NASDAQ's been flagging sideways. It's not the one I wanted. The Dow, take a look at the Dow. It's breaking down, pretty big volume, definitely flushing down. It looks like it's getting exhausted, ready for a bounce. And the Russell 2000, it's definitely moving down below the 50-day as well. So we're definitely seeing some weakness in the markets. And our long-term trend behind the scenes is starting to break down. We are seeing weakness, but it doesn't mean the trend's ended yet. If the market could potentially recover today and we stay in our SSO, but we'll see how that unfolds. This longer-term trend will take a lot longer to change gears. The weekly chart is a different beast on its own. Anyways, that's it for now. Talk to you soon. Bye-bye.